Hello and welcome back to Trading with CJ. Now today we're going to be covering one of the most talked about stocks since the market crash, and that is CCL, Carnival Cruise Lines. Now, just in case you're not familiar with this company, Carnival Cruise Lines is the world's largest cruise line operator, and pretty much every single investor has had this company on their radar, whether that be for the fact they love the company or the fact that they are steering clear. Now, as you can imagine, this company has been hit massively over the past few months. It saw a drop of almost 90%, which is just huge. Now, I personally am a big fan of Carnival, but does that mean that I think their stock is a buy? Well, that's what we're going to find out in this video. We're going to take a closer look at Carnival and see if this company has potential. Now, before we get into it, I just want to say that I'm not a financial advisor. This video is made purely for entertainment purposes. So if you are planning on investing into the stock market, you should always do your own research first. With that being said, if you do find this video interesting, please hit the like and subscribe to my channel. Also, let me know in the comments below, what's your thoughts on CCL? Is it a company that you're investing into? Also, if you have any suggestions for some future stocks that you want me to look into, please let me know down below. So, let's jump in to CCL. So CCL, as we know, it's the largest cruise line company in the world. It's got a market cap here, as you can see, of $14.9 billion. Now CCL, just like every other company in this sector, has been hit massively. So Royal Caribbean, Norwegian Cruise Lines, etc. They've all been hit massively. Let's take a look at their current share price. So their current share price is, at the time of recording, $20.42 per share, which, to be fair, that has gone up quite a lot in the last few months. If we go in the last 3 months here, you can see it's been steadily kind of going up. Let's go to the last 1 year graph. It was trading at around $7.97 a share at the drop. So if you got it at that price, you did a phenomenal, because you've already made over 100% returns on your money. And the highs for the year was $52.84. So a massive drop there. It's currently around 55-60% from where it was a year ago. So as we know, the share price has been affected. That's because the cruise lines aren't running. Although there is some news about that. Apparently they've been given the go-ahead for limited operations in August. So we'll see how that goes. Hopefully there's not another spike, etc. in cases. And then they'll be all right to start sailing from August. Obviously, that's going to be a lot of health and safety measures in place, but with that in mind, it's given Carnival some comfort. Obviously, we know the volatility here is going to be extremely high. It's pretty much as high as you can get, because there's no certainty at all with this industry at the moment. The valuation for Carnival is 50.6% undervalued. So fair value should be $41.30 according to Simply Wall Street, and it's currently at 50.6% undervalued. So a massive discount on this price still, even though it has shot up somewhat in the past 3-4 weeks. It's got a very low PE of 7.5 times. The industry is 18.8. Most of the other cruise lines is around this PE ratio as well. They've all had roughly the same impact. This is what I really like to see about Carnival here. The future growth. In the next 1 to 3 years, based on 17 analysts, 99.1% future growth. Now that's future growth in the company. And as we already know, in terms of the share price, it's already up over 100% from where it was 3 weeks ago. So 99.1% growth there. So looking at this graph here, we can see that in 2021, it's going to be still making a loss, and around about mid-21, that's when it's going to start going back up, and it's forecasted to be making a profit again by 2022. And if we're comparing its growth forecast to the industry 52%, obviously that's like the travel industry, cruise line industry. Company though, 99.1%. Massive forecast growth earnings for Carnival Cruise Line. So this is one that I'm really interested in. This is the future return on equity. So in the next 3 years, predicted return on equity is 7.5%. So it's a bit low compared to the industry of 14.4, about half. But as we know, the share price is undervalued by over 50% at the moment. If we look at their past performance, Carnival has done very well. Now this is saying obviously it's bad, it's 11.9%, but it has dropped massively due to this pandemic, but it's still up 11.9%. Now if we look at the earnings and revenue history graph here, we can see that obviously it's been dropped from 2020 due to what's gone on. It was 14.4% profit margin, now it's been cut down to 8.9%. So at least it's in profit. That is one great thing about this company. A lot of companies at the moment are actually getting to the point where they're not going to no longer be in profit. So Carnival is still in profit, and as I said, it's getting closer and closer to being able to operate again. So the financial health is one of the main things we care about with Carnival here, because they haven't been operating for months, and it's when they do start again, it's going to be very limited capacity. So they're still going to feel the full effects of this pandemic for quite a while. You can see they've got 44 billion in long-term assets. That's obviously the cruise ships and everything as well, and 11.94 billion in long-term liabilities. Short-term liabilities 10.72 billion. Their debt to equity history here, 53.3%. That's pretty good, to be fair. This could be a lot higher. Obviously it has shot up because they've taken out some debt and some loans, etc., which we'll go on and cover in a minute. It has shot up. It was 42% and now it's 53%. So that's still pretty good, to be fair, considering everything that's going on. Now let's take a look here at their balance sheet. In terms of their cash short term, they've got 1.4 billion in cash, and like I said, physical assets 39.5, debt 13 billion. Now Carnival didn't get any help from the US government. They're not registered in the US. They're registered as in Panama. That's for tax benefits, etc. And also the government haven't helped them because most of their employees are actually international. So the US don't really see them as a great help for the US economy. So they haven't had any government help. They have, however, managed to secure loans over these past few months of around $6 billion. A huge amount of loans. But the downside to that is 4 billion of that has to be paid back at 11.5% interest. Huge amount of interest that they picked up at, but they had to do what they had to do. And then another 1.75 billion of that is at an interest of 5.75%. So that's a lot better interest rate, but the 11.5% interest rate is huge. But they did manage to secure $6 billion. The thing about Carnival as well is they are going through this money at a rate. At the moment, they are not operating, so they're going for around $250 to $275 million per month. That is a huge amount. They've got to pay for the upkeep of these ships. They're not running, and they're still there, and they still cost a substantial amount to the company. So 250 to 275 million. On that basis, if Carnival was to operate with zero income for the next however many months, they would be fine. They would be able to survive until early next year on a 0% income. Now, as we know, there's talk of them being able to operate again in August, so they will start earning income. Whether that's not going to be anywhere near what it was, but it's not going to be zero. So there is that great benefit to them. They do have enough now to sustain until next year. However, like I just said, it is at a massive cost of 11.5% interest. The dividend for this company is 3.81%. However, that has obviously been cut. They're not paying a dividend. And we can see here the growth. It was kind of growing, to be fair, from 2010 all the way up to 2020. And then, as we say, it's been cut. It's now predicted to go back to 3.8% roughly in 2021. Was paying a very high dividend anyway. And as we know, there is no current payout to shareholders. So after looking at their balance sheet and their financials, etc., I can't see this company going bankrupt. I think they're going to be around for a very long time. But I also think they're going to struggle in the near future. But as we know, even if they earn zero revenue, zero income over the next however many months, they have enough to survive until early next year. And the world's already starting to get moving again. They're talking about operating in August. So if that does go ahead, that would be great for the company. Whether it does or not, we shall see. So for me, I think the share price is a little bit overvalued at the moment, given the current circumstances. But I also can't see it dropping back down to below $10 per share. Personally, I really do like this company. I think they have massive potential, and I do own shares in CCL. If it was to drop to $15 or less, I would probably consider buying some more. Now, I'm aware that the leisure and travel industry at the moment is a speculative play. So each to their own. You should always do your own research if you are planning on investing. So thanks for watching, and I hope you found this video useful. If you have, please hit the like and subscribe button. It really does help out my channel. Also, let me know any suggestions of what stocks you want me to cover in some future videos. I'm open to that. Leave them in the comments below, and that's something that I will look into. Thanks for watching, and until next time.